Hi, this is Steve Davis over at Total Wealth Academy, and this is Investor Tip Tuesday. Investor Tip today is actually a question. Do you believe your home is an asset? For most people, they actually believe their home is their biggest asset, or other people will say their biggest investment. Well, here's the problem. Your home is not an asset, it's not an investment, it's an actual liability. In other words, you're going to lose money on your house whether you like it or not. It's still better than leasing, but watch what happens. Let's compare buying a single family home to live in and buying a single family home to lease. You're going to notice there's a $600,000 difference in profit between the two. We start off with the same house. $200,000 ARV, you buy one to live in, one to lease out, to make a rental. Then we assume that we're going to have a mortgage on both of them. $137,000 is going to be the interest over the 30 years on a mortgage like this. Your taxes are going to be 3%, which is $180,000 you're going to spend. Your insurance, about 1.5%. or $90,000 over the 30 years. Then you've got maintenance. You know you're going to have to upgrade your kitchen after 20 years. You know you've got to upgrade the bathrooms. All that's going to come into it. It's going to be about $120,000 to maintain that property over the 30-year period. Your all-in after 30 years is $727,000. Now let's assume that over the 30 years, that property triples in value, which it probably will. It may even go higher than that and likely would. But let's just keep it at $600,000. You sell the house for $600,000, you lost $127,000 over the 30-year period. But again, it's better than leasing, because would you have $600,000 in your bank account if you leased for 30 years? No. It's like a savings program, so it's not all bad. But I want you to see the difference and why people get rich buying little single-family rent houses. If we go over to the rent house side, we have the same interest, the same taxes, the same insurance, the same maintenance. All in is the same, $727,000. We sell it for $600,000, but there's another line item here. You brought in $630,000 in rent, meaning when it's all said and done, you made $503,000 off that deal. What if you just did that 10 times? Over the next 5 or 10 years, pick up 1 or 2 houses a year, get yourself 10 houses. At the end of 30 years, you would have $5 million in your pocket to live off of in retirement. I don't suggest that. Cash flow is more important, but I want you to at least see the difference. When you add these two numbers together, there's a $630,000 difference between owning a home where you live and buying a rent property. Remember, your home is not an asset, it's a liability. It takes money out of your pocket every month. This property puts money in your pocket every month. That's the major difference. That's the distinction you need to put in your head. And that is Investor Tip Tuesday for this week. Thanks for watching. Oh yeah, and one other thing, I will be in Dallas teaching this Saturday, November 6th. This is the one-day class where I go over the exact path that I took to build wealth for myself and my family that you can use as well. If you're interested in that, please click on the link below. Thanks again for watching.